Hi, Leah, can you hear me?
Yes, we can hear you.
Hi, guys. Are you good to see you? Ezra, just testing my mic. Just making sure everybody, the sound system is fine.
Yes, I can hear you. John can hear you, Ari, and you're there with us too, Ezra.
Yes. Hello, everybody.
Excellent.
Hi, everyone.
Thank you so much for joining us, everybody. So today our panel session is on decentralized finance and financial crime risks. And firstly, I'd just like to introduce myself. My name is Leah Callon-Butler. I'm the director of a consulting firm called Emfarsis. We are a consulting firm that's focused on the role of technology in advancing economic development, particularly within emerging economies such as where I'm based in the Philippines. And we've got an interest in advancing financial inclusion while also protecting financial integrity and getting that balance right. So we really believe that discussions such as the one we're about to have today are extremely important in exploring the trade-offs between those two agendas. I also write a regular column for CoinDesk, which is all about the impact of blockchain and crypto across Southeast Asia. And you may recognize me as the writer and narrator of the Play to Earn mini documentary, which is all about NFT gaming in the Philippines. So look it up on YouTube if you haven't seen it yet. It's called Play to Earn. But with that, I would love to throw to the brilliant panel that we have for today. Speakers, perhaps you could kick us off. Could you please go ahead and briefly introduce yourself, but also, could you give us a taste of what DeFi means to you? Because there may be some people in the audience who are not overly familiar with the idea. And this is a very new area of emerging, transformative tech with lots of definitions sort of throwing around. So perhaps you can give us a high-level definition of what DeFi is, as well as some of the opportunities that it represents and the risks that might come with it from your perspective. So Ari, do you want to kick us off?
Happy to. And thank you so much, Leah. Thank you so much, Regulation Asia, for putting this group together. Really, really excited for this conversation. So my name is Ari Redbord. I'm head of legal and government affairs for TRM Labs. We are a blockchain intelligence company. So we work with financial institutions and cryptocurrency businesses, as well as law enforcement and regulators to trace and monitor transactions in cryptocurrency to stop money laundering and other illicit activities. Prior to joining TRM, I was a federal prosecutor in Washington, D.C. for about 11 years at the U.S. Department of Justice. I spent much of that time working on threat finance cases, so money laundering, terrorist financing, sanctions, criminal prosecutions, export control. About 2 years ago or so, I left the U.S. Attorney's Office in D.C. and went to the U.S. Treasury Department, where I was the senior advisor to the Undersecretary for Terrorism and Financial Intelligence, which is a mouthful, but it's the role that oversees OFAC, which is the U.S. sanctions regulator, and FinCEN, which is the anti-money laundering regulator for the U.S. government. In terms of DeFi, and I'm really excited to dig in here because I think it's really sort of one of the most interesting sort of issues of the moment. In terms of DeFi, I love to find corollaries to sort of the real world or sort of the off-chain world. And really, it's the financial services for crypto. It is decentralized, it's global, it's fast, it's cross-border, it's permissionless. It's sort of all those attributes that cryptocurrency has, but it's sort of the financial services application for crypto. So if you, lending, interest, mortgages, all the sort of financial services that we have in the real world, DeFi provides that capability for cryptocurrency, but like crypto, in a decentralized way. And I know that in this conversation, we're going to get into some of the illicit finance risks, to some of the regulatory framework, but it's obviously something that's very, very top of mind at TRM, and we're working with a number of DeFi protocols to sort of help really keep illicit finance off of decentralized applications.
Excellent. That's a great definition to kick us off there. John, maybe you'd like to go next.
Thank you, Leah, and also I'd like to thank the sponsor, Regulation Asia, for this event. Hi, everyone. My name is John Ho. I'm the head of financial markets legal for Standard Chartered Bank. We're based in the UK with offices in Asia, Africa, and Middle East, and in the Europe and Americas. I think it's a good segue for what Ari mentioned about DeFi. I think from my vantage point, I think DeFi is a broad term for financial services that build on top of a decentralized foundations of blockchain technology. And it's, to come to think of it, it's, when it started for the purists, it's self-regulatory in nature, no intermediary. It relies on peer-to-peer model. And obviously with a number of expansion, it aims to sort of create liquidity. So the idea of DeFi, as what Ari has mentioned, is to reconstruct and reimagine financial services in this cryptographic world, rely on a combination of distributed ledger technology, digital assets, and smart contracts to achieve the sort of transactions and ecosystem. So I think the attraction that we see now and the growth of DeFi is essentially opportunity to tap on the combination of new technologies, native assets, to create a new financial services in this space. So I think that's a good sort of segue to sort of introduce the audience to what a DeFi would be.
Yeah, absolutely. And we've heard that idea now a few times around, how could we decentralize existing financial services and rebuild? I love the term that's often used about money Legos in DeFi about breaking the financial industry down into its primitives and rebuilding into something that may be more effective and essentially trustless, which is all those benefits that Ari was talking about in terms of what blockchain can bring. What about you, Ezra? You might be coming from a slightly different perspective. Tell us about where you work and how you approach this definition.
Thanks, Leah. So personally, I think that DeFi is a experiment and also a revolution to some level. Using the blockchain and using code to create financial services without human intervention or without manual labor is something that is very new. And I'm personally quite interested. I'm a DeFi user and investor as well. I work at Kick DeFi, which is one of the rare CDeFi platforms. We provide centralized access to decentralized finance. So instead of having people, users, to go into complicated platforms and not sure how to use these platforms, not sure how to connect wallets, we simplify everything and we do everything for our user. But at the same time, users enjoy the levels of return that you see in DeFi. So we are somewhere in between centralized finance, traditional finance, and decentralized finance. Thanks.
Love it. Thank you. That's a really good way to begin. And given the theme of today, we are at a Regulation Asia event, perhaps you could help us set the regulatory landscape. So, what does DeFi regulation or lack thereof actually look like right now? And, how does DeFi currently interact with VASPs, which that stands for Virtual Asset Service Providers, if you're familiar with the FATF definition? That might be something that people are a little bit more familiar with in terms of the treatment through a regulatory standpoint. But we've got, FATF recommendations, then we've got the US jurisdictional treatment, and then right through to Singapore, who's looking at it different again. So, what's the lay of the land now? What could it look like in future? And, I guess AML CFT is kind of always top of mind in this particular discussion, but are there other themes that we should be thinking about when it comes to DeFi? So, for example, things like monetary policy, financial stability, particularly in relation to things like stable coins, or even infrastructure building and standards development. So, there's a lot there, but perhaps you could give us the lay of the land and maybe the challenges that we're coming up against when thinking about these things. Regulating DeFi is not a simple process. It's kind of a different beast to anything that anyone has dealt with before. John, do you want to start with that one?
Sure. So if everyone is looking for an answer, I think the definition of DeFi, as I mentioned, is not a legal term of art, right? And I think for those of you who are familiar with DeFi, you know that the DeFi is cross-cutting in the sense that it covers a wide span of variety of financial services. And for those who are uninitiated, just to give you a bit of a broad brush, it's, as Ari say, it's financial services in the cryptographic world, leveraging on blockchain or DLT or distributed ledger technology. And it covers things like activities such as lending, deposit taking, derivatives trading, asset management, collective investment scheme, and all types of activities that one would associate with financial services, but done in a sort of a native crypto world. So if you look at the way the DeFi is currently being defined, regulators are playing catch up. There are no laws, as far as we are aware, around the world that is specifically dealing with DeFi, given its expansive and cross-cutting nature of the activity. But what that happens is right now, where certain activities are largely activities that are not well defined, regulators are obviously looking at how do we control that space. So increasingly in discussion, in some of the trade forum discussion, in some of the public seminars, and some of the statements coming from regulators is that they're playing catch up in this space. And they are also looking at activities that are not licensed, but should be licensed. For example, there's this sort of analogy I like to say: if it looks like a duck, it walks like a duck, it behaves like a duck, it should be regulated that way. So the other way to put it is, if you're undertaking a same regulated activity, same risk, the regulators are going to say you are subject to the same treatment, regardless of whether you're leveraging on technology or the old payment rails or payments or the securities way of doing things. So I think given that mantra, I think quite a lot of people are now looking at, am I doing something that will go into a realm of regulations? Just looking at what's happening the last few days. If you look at the last 2 days, the SEC chair, Gensler, and from the SEC have said that it doesn't matter whether you're doing a decentralized or a traditional method. If you're doing an activity, at least in the US, that impinge on US securities law, the SEC is within the SEC remit. So I think that's what I'm saying about same activity, same risk, same regulations. So I think with that, I think it's important for parties, that if you're operators, your investors, to look at this space, that it's a rapidly evolving space in terms of regulations. One needs to be aware whether the activities you're doing touches on any of the regulated activities. So this, what I would say is, there are also, you see the positive part. What we like, at least on the CFI space or traditional finance side, it's the innovation side. The ability to automate back office, making faster payments, the ability to automate compliance with smart contract. That in itself, the regulators have been very, very clear around the world. They do not regulate technology. What they do, they regulate licensed or unlicensed activities. But I think key important is to harness the benefits of DeFi, at least for a number of like traditional finance, because we see a lot of benefit in terms of client experience, lowering transaction fees, and giving client a better experience with reducing settlement risk from T+1 to T+0, transparency that we can see from the blockchain, and also, as I mentioned, the efficiency and traceability that comes with a cryptographic or DLT technology. I think that's a good segue. Perhaps I can perhaps let Ari to sort of chip in as well on this perspective.
Yeah, absolutely happy to, and thank you so much. Quite frankly, as I left the government after about 15 years, John will tell you that I reached out to him as I was trying to get smarter, sort of joining the crypto industry on these particular issues, particularly monetary policy and stability. And he was really one of my first calls when I joined sort of the crypto industry to really start to understand sort of particularly those issues. And I love hearing from him. Hearing from him on those topics. So, level setting a little bit in terms of the anti-money laundering landscape, regulatory landscape. It's interesting. It's regulators all over the world trying to regulate technology in real time. In many respects, the issues that FATF, the Financial Action Task Force, or the UN of money laundering, is dealing with are unhosted wallets, NFTs, and DeFi. These are the issues that are evolving, with the technology, every minute. So really, there's not a whole lot out there on DeFi. I think when I sort of look out there, I think FATF has probably said the most at this point, and now it's sort of up to those global regulators to really step in. But recently, I think around March, FATF put out some revised, updated guidance where they really sort of get into DeFi. And the real question is are these decentralized applications VASPs, virtual asset service providers? And with FATF, it's just all about the definitions, not usually sort of someone who digs into the definitions, but really, so virtual asset service providers are essentially exchanges or other crypto businesses that either trade in or custody digital currencies or virtual assets, as FATF calls them. And FATF essentially says in this guidance that that DeFi, or a decentralized application, is a VASP for FATF's purposes. And if you're a VASP, that means you have a number of obligations, including licensing with your regulator, building essentially a robust risk-based compliance program, having a transaction monitoring solution for cryptocurrency like TRM Labs, and a host of other compliance obligations. So the question is DeFi a VASP? And FATF says if you are involved with DeFi, you are a VASP. And again, it's all about definitions. And I think this term involved is going to become one of the big terms that we're going to all talk about over and over. Are you involved? Or are you not involved? It's like dating. Okay. Are you together or are you not together? And I think that, involved is going to really mean everything. And involved to FATF when it comes to DeFi is, essentially, have you created an asset? Have you set parameters? Excuse me. Do you hold a key? Essentially, are you involved in a decentralized application? And if you are, you're going to be regulated like a VASP. And I think it's a very, very interesting issue and sort of one we're going to see play out, over the next few months, really.
Yeah, absolutely. And, I think this is interesting, though, because there's probably a lot of DeFi entities that aren't looking to update their relationship status. They're probably not looking to make it official. And this is a different beast. We're talking about, if you're going to compare DeFi to a VASP, which, we might look at as a licensed crypto exchange in perhaps the first definition of a VASP from the FATF. Now we're looking at these borderless distributed ecosystems. There's no central entity, or at least there doesn't appear to be a clear one. And the accountable persons can be really difficult to identify. It's quite often that you'll have these DeFi projects without a clear founder behind it. So, I guess with all of that, how do you come at this issue, Ezra? I know that you've had a lot of experience with the Singaporean regulatory landscape. What are your thoughts on how this is evolving?
Thanks, Leah. So I guess regulators, the job of a regulator is to do their job. So basically, to regulate what the law says is to be regulated. And yes, FATF has set out quite a wide range, as in has expanded the regulatory purview, or suggested it to be quite wide. And understandably, countries, regulators will try to follow suit and try to implement the rules that are suggested by FATF. Whether or not it is able to catch DeFi projects, that is a big question, because as you said, DeFi projects, you may not know who's behind them, you may not know where they are based. And if, let's say, a particular DeFi project does not have, identifiable founders or identifiable headquarters, then how is it would they be regulated? It would be very, very difficult. And I'm not sure if actually that is what would benefit a regulator to do, to bend over backwards to find out where, a certain DeFi project is based. So I guess regulators are mostly concerned about protecting their citizens, people within, residents and people in their country, and rightly so. That's what regulators should be doing. So I guess if, let's say, if there is evidence to say that a DeFi project particularly appeals to residents of a certain country, for example in Singapore, then MAS would probably want to take action and want to see what is the situation like. Are they performing VASP? Are they performing VASP transactions without being a VASP, without being regulated? Then of course that they will do something. The regulator will do something about it. But the question of whether or not DeFi itself should be regulated, I think that is very difficult to answer, because is DeFi itself finance? It calls itself decentralized finance, but is the transactions that take place on the blockchain and built in that manner, should it actually be regulated the same way as traditional finance? That is a question that has yet to be answered. Of course, yes, as John said, if it looks similar, then it should be regulated. But whether or not this is is not yet set in stone. I personally think that the benefits of DeFi is to provide access to certain financial services like loans, like derivatives, and also through being able to generate some kind of return through using blockchain on DeFi platforms. That would be very helpful, especially for third world people residing in third world countries, where they do not. It may be difficult in this COVID situation for them to find jobs. So using blockchain platforms, as what you write actively about, is actually a really good way for people to maintain their livelihoods. So probably this benefit of DeFi would be something that should be considered. Thanks.
Leah, yeah, I would just add sort of one thing to that, because I think it's exactly right. But I think it's sort of there's so many interesting questions that are sort of flying around from John and Ezra here, and that is sort of should we regulate DeFi? Maybe not sort of as much the question, because I think probably anything where you can move money at the speed of the internet should be regulated in some respect, if at some level. But really the question is, should we be regulating or thinking about DeFi the way we think about traditional finance? And I'm not, and I think the answer is probably no there. And I think what's so unique about cryptocurrency and decentralized finance is sort of the nature of the blockchain and the open ledger. We have visibility on financial flows in ways we never ever have before. And look at TRM. This is what we're focused on all the time, is sort of understanding typologies and the risks of illicit finance in cryptocurrency and decentralized finance. And this capability of being able to monitor transactions, being able to see transactions in real time, allows regulators more visibility than they ever have had before. And sort of my view is that actually could allow for less regulation, not more. Because when you have that level of visibility, you might not need the sort of what we call in the U.S. sort of our Bank Secrecy Act, infrastructure. You really need the ability to monitor transactions. And I think we can regulate DeFi and cryptocurrency in much different and more sophisticated ways than we've regulated the fiat system. And that's kind of what I'm most excited about here. It's an opportunity based on this technology.
Yeah, just to add to that, right? Debate is that, and where we see from a traditional finance world is as I mentioned earlier, the benefits of blockchain and the DeFi sort of benefits. One example, not necessarily DeFi, but it's a clear example where it's heading, is the European supranational EIB just recently issued a bond on a Ethereum public blockchain. So what they have done is basically allow for a issuance by supranational, but at the same time relying on a platform such that it has the ability to reduce back office costs, create transparency, traceability, and reap the benefits of a decentralized blockchain, but at the same time not compromising on KYC, AML, which is still done on a centralized basis. So I do see this world of CeFi and DeFi coexisting. It's not a mutually exclusive world. And the other trend that we see, we talk about the DeFi, to the purists, is DeFi means no regulation at all. But what is actually happening, the reality is we're now seeing a emergence of what we call a regulated DeFi. I mean, certain aspects of DeFi, especially if the DeFi operator wants to attract institutional money, pension plans, ERISA funds, then there would be some sort of trade-off that they do want transparency, AML, KYC, and the sort of high standards we probably associated with the regulated investment. So that space is at its infancy level, but it is a fast and growing area.
Yeah, absolutely. I just wanted to touch on something that you mentioned, Ari, about the power of the blockchain to deliver transparency in terms of monitoring illicit activity and even, in some cases, preventing risk. I guess a lot of people in the crypto industry would argue that cash is still the ultimate privacy coin. And I guess that's some of the frustration with some of the rules that I guess have been retrofitted to this brand new technology. Like if I may dare say, the travel rule, it's a very old rule that has been applied to something very new. And, I think the industry has done a phenomenal job of responding to this and making sure that they meet the compliance requirements. But perhaps there was a different way. Perhaps there could have been actually a different set of rules that recognizes the ability of blockchain to meet these AML CFT requirements, but without having to kind of use an old set of understanding on how we do this. So, with that in mind, I guess, is regulation at this early stage even needed? We're at a very nascent stage of this industry, and I guess a lot of people think that this technology needs time to develop and flourish and build ecosystems. So, is there a risk of overregulation? And I guess if DeFi doesn't really want to be regulated or licensed at this stage, and maybe it's impossible to enforce anyway, given some of the challenges, how can regulators get the balance right to avoid overreach and avoid unintended consequences and not stifle innovation? Perhaps there's some other themes that we could be looking at first, such as building capacity, improving taxonomy, standardization of smart contracts. I know that's something that you talk about a lot, John. Scalability. How do we get that balance right, particularly at such an early stage of this industry?
First of all, I love cash as the ultimate privacy coin. I view sort of the wallet in my pocket as the ultimate unhosted wallet, but I'm going to steal that, Leah. I love that. I think that's perfect, and it's exactly right. There's no question. I think the technology that we have for cryptocurrency allows us visibility and regulators visibility in ways that we couldn't even imagine in fiat currency, and it's a really powerful capability that I think allows potentially for less regulation, not more. One thing we say at TRM and sort of what we see on the blockchain, sort of when we do our analytics, is that we see that all roads still lead to VASPs, right? Unhosted wallets, DeFi, you're still ultimately transacting with VASPs. I know that regulators are going to regulate for a future state where you do have a truly decentralized system, but we're not there yet, and that is. Decentralized finance, unhosted wallets, they're still using regulated VASPs primarily as an off-ramp to fiat, because for better or worse, we still really need to off-ramp to fiat to transact in the world we live in today. And at that off-ramp is where regulators, where law enforcement have the most visibility. And that's why we've always encouraged sort of not regulating unhosted wallets or DeFi out of that interaction with VASPs. We want that to continue to allow regulators and law enforcement and others to sort of have that visibility. So I think it's a really interesting moment. And Leah, I think your question is the most important question. And that is, I think there's an opportunity to see how the technology plays out for sure, again, because it is happening so fast. And I think it's also really important to know that, we are not yet at that truly decentralized future state. And I have had sort of, DeFi folks, say we're getting there or we're close, but I think that the bottom line is we're still in a world where you need to off-ramp to fiat, and I think that is still where we have a ton of visibility around already regulated VASPs, not sort of extending the definition necessarily to decentralized finance. So if anyone's to take anything away from what I'm saying today, it's that the technology is evolving, regulators are trying to keep up, and we really have this opportunity where we can create the right regulatory framework for crypto, for decentralized finance that's thoughtful and doesn't stifle innovation, yet to the extent possible keeps illicit actors out of this beautiful financial system that we're building.
Yeah, just to add to what Ari mentioned, I think to your great question about how do regulators and the DeFi space play in this. I think one, there's got to be greater collaboration in terms of a couple of things. Sandboxes is one way where regulators in the private sector to work on regulatory sandboxes to test some use cases. looking at some of the problem statement I've just defined, like for example, AML, KYC, we just talk about in great detail. The other thing is also on DeFi, there are obviously growing pains. For example, you have governance risks, smart contract risks, technology risks, that it's still not at a mature state. Because if you look at what's happening in DeFi world, hacks has been happening, you still have bugs, contracts. Now, that's not to take away all the benefits and growth we see, but at the same time, as with any new and evolving technology, one needs to address some of these, because there are solutions in the market to address scalability issues, technological issues, but I think it takes time, but also to lend confidence to the market, especially when some of the DeFi right now are tapping institutional money, even tapping public monies. That's where the regulators step in, because you're talking about financial system stability, you're talking about consumer protection, investor risk. That mandate still lies with the regulators. And I think this is where the rubber hits the road, is if you want to touch institutional money, public money, then you need to comply with some of the basic tenets that we just set out.
Ezra, did you want to add to that?
Yeah, thanks. I guess from my personal perspective, I actually think that regulation is a good thing. And because of my understanding of DeFi and my personal involvement, I am keenly aware of how often hacks take place, and keenly aware of how often it is that a certain DeFi platform, the price of the asset can just go down and go down a lot. So thankfully, I haven't been exposed. I haven't lost any money. But yes, as John said, in terms of the idea itself is very, very new. So for most projects, it is still very, very young. And in building any tech platform, especially one as complicated as blockchain, it takes a long time for it to mature and for it to improve. So for speaking from, at least from my own view, I personally believe more in projects that are more mature. For example, like Ethereum projects. I think Ethereum is a pretty solid blockchain in terms of its risk level. We also at Cake DeFi we are quite close to a blockchain project called DeFi Chain. Is built upon the Bitcoin blockchain, and Bitcoin, as you may be aware, is the most mature blockchain, being like 12 years old. And when you use a mature blockchain and you build upon it, then the risk of a smart contract error is lower, generally speaking. So for lots and lots of smaller DeFi projects that appear and suddenly they get hacked, and then after that they close down. So yes, the risk is very, very high, but at the same time, it is very much a experiment. I think engineers, blockchain engineers, and project developers, we are all people. They are all seeing how far they can go with this, and to what. Essentially, it is a test, and it's a question on what exactly is finance about. Could we actually replicate the kind of products that we see in traditional finance just using code? And the question has yet to be answered. We don't really know whether it can be clearly, fully replicated, because yes, the risk is very high, and sometimes not having a manual involvement is not a good thing. Yeah. So I do enjoy it as viewing it and being a part of it, investing in it. But at the same time, I'm aware of its risk, and I think that retail investors should be made aware as well. However, I would say what lawyers always say: caveat emptor, buyers beware. If you want to invest in something, please understand what you are investing in. Yes, the regulators will try to protect you, but in the end, you are the one who has to protect yourself. Thank you.
Yeah, absolutely. I think, as you mentioned, Ezra, you really put this into perspective. Bitcoin is the most mature, but when we say that, it's only 12 years old. And the cryptocurrency has had a very long time. I mean, in crypto terms, 12 years is a very long time, to be able to reach decentralization. And there really is a road to that point. So I guess that's why it's so important that these ecosystems have time to develop. As another example, MakerDAO, which some might be familiar with, they're the creator of the DAI stablecoin. They are currently in the process of dissolving their centralized foundation and handing over operations entirely to their DAO, or decentralized autonomous organization, which, you know, is a really exciting development for a DeFi protocol such as MakerDAO to be able to reach that ultimate goal of full decentralization. But I guess, you know, that still has challenges for regulators, because as we see more DeFi adoption, we're probably also going to see more crypto to crypto transactional interaction, as opposed to, you know, focusing only on that, I guess, fiat off-ramps choke point. So with all of that, you know, I won't say where will DeFi be in 10 years, because that's a lifetime. And as we know, crypto moves pretty fast. So we've only got 8 minutes to go, but perhaps you could look into your crystal ball and give me an idea, where do you think DeFi is going to be in, say, 12 months' time? Ari, do you want to kick us off?
Sure. Yeah, no, I'm happy to. And I will not even attempt to tell you where DeFi is going in the next 12 months, if the last few months is any indication. But I feel like I have a sense of sort of the regulatory landscape, at least sort of the way FATF is thinking about it. And I think what you're going to see is more, and I think you're going to see FATF, you know, really try to understand DeFi. I think there's going to, I'm hopeful they'll take some time to really sort of dig into the technology and see where it's evolving a little bit. But I think what you're going to do is you're going to slowly see global regulators. For us, it's FinCEN in the United States, you know, and others around the world that are going to really start to think about decentralized finance and how to regulate in the space. I think Maker's a great example, Leah, of sort of like, all right, there are these protocols in that next stage of development, if you will, where we're becoming closer and closer to that sort of decentralized world. But I think for the immediate future, quite frankly, we are still in a world where you need those off-ramps to fiat, you know, in order to buy things, in order to transact. And I still think we'll be, you know, regulators will be able to get comfortable with the fact that they are regulating those off-ramps, those virtual asset service providers, the exchanges typically. But I think you're going to see regulation evolve at the speed of the internet. And I think that's something I don't know that I have ever seen before. I've spent a lot of time sort of in the legal regulatory world, particularly on these anti-money laundering issues, at Treasury and at U.S. Department of Justice. But I'm not sure I've ever seen regulators try to keep up with the technology this quickly. And I think you're going to continue that, and you're going to continue to see it be difficult. But I do think you're going to have more and more regulators talking about decentralized finance. And I think this word "involved" is going to become the big word of 2022 for sure. Are you involved with DeFi? And if so, you're a VASP.
Sounds like there's going to be a great need for capacity building then, to ensure that the authorities are well informed on what this technology actually does then.
You're absolutely right. It is all about the tools and training and giving regulators the real understanding of these capabilities in order to regulate the space. That's right on.
John, what are you thinking?
Yeah, I think the way I see it, just for the audience, in sort of my humble view, is that there will be two parts to the DeFi. One is the technology adoption and the benefits of DeFi, as I mentioned in itself. They will probably see more and more sort of traditional finance and institutional adoption, because as I mentioned, if you can reduce back office costs, settlement time from T+1 to T+2 to T+0, that benefits is something that's hard to ignore, because clients are demanding faster, instantaneous settlement and payments, you know, lowering costs of cross-border payments. That benefits that we see, you know, we started with obviously Bitcoin technology, but now with this DeFi, is something that we will probably see greater adoption. Now, the other part of DeFi, where you actually adopt what is deemed as financial services, depending on the activity that one is carrying out. But if it's an activity that is into the realm of regulation, i.e., for example, fiat deposit taking or off-ramp, where in certain markets it falls within a regulatory remit of a particular regulator, there will be caution is required, because I think regulators are catching up in this space, right? Just because nothing is being done to date doesn't mean that regulators are not going to look at this space, because we spend a lot of time behind closed doors with you know, a lot of policymakers and central banks I can tell you for a fact, they are looking into this space with a greater keen eye of detail and trying to understand the space, obviously striking a trade-off between promoting innovation at the same time also making sure that their mandate with respect to financial stability, consumer protection, investor protections are maintained, because that's their dual mandate. So in that sense, the other thing I'm also seeing is the emergence of business model that never been seen before in DeFi. For example, in payments, insurance, stable coins, derivative, infrastructure. So there is an emergence of new business model that currently doesn't exist and will exist and grow because of the DeFi explosion. Thank you.
Fascinating. And what do you think, Ezra? And I guess there's your opinion, but also interested to hear how the next 12 months might impact Cake as your business grows and develops too.
Thanks, Leah. I think Cake will still be around because we are centralized. We have applied for a payment services license, and I personally liaise with MAS, and I enjoy talking, explaining what DeFi is about. I enjoy explaining how exactly do we do what we do. And for us, our strategy is that being centralized, being licensed is a good thing, and it shows up on our numbers. For a company which was started in the middle of 2019, we currently have $500 million of customer assets, and that is really fast. The growth is incredible, and we can only do this because we understand crypto well, we understand blockchain well, and at the same time we are willing to be regulated, we are willing to be licensed, we are willing to adopt consumer protection measures. We are willing to do everything, in order to give the customers what they want. That being said, not every single DeFi platform has the same belief, and I think the larger ones probably will still be around in 12 months' time. But the smaller ones probably they would have trouble, not exactly because of regulation, but probably because of market demand. Because there are so many products, there's so many platforms and projects doing essentially the same thing. So there will definitely be consolidation. The bigger ones will survive, the smaller ones probably would not. And I'm very interested to see how things go. In the end, I think DeFi will still be around. And whether or not it's regulated, I think we'll see. But at the same time, the bigger focus right now is probably centralized, unregulated platforms such as Binance, where you can see that regulators are surely putting a lot of attention into it. Thank you.
Yes, well, I think we could have a whole extra segment to talk about Binance and its current issues, but we'll leave that for another day. Thank you, Ezra. I think you touched on a number of really important things. Challenges moving forward. Consolidation can be a good and a bad thing depending on who you're talking to, but it will be interesting to see how increased regulation also brings that trust layer to the industry, and I guess that will also encourage more institutional participation and adoption as well. So there's definitely pros and cons to it all. I just want to say thank you to all of our speakers. Everybody had such a different perspective on this topic, so I think it's been an absolutely fantastic discussion, and we were the lucky last of the whole day. So thank you, Regulation Asia, for having us. Ari, did you want to say something?
No, I can't believe we're dropping the mic on Regulation Asia today. This is the last but not least. Yeah, awesome.
No, it's been a really great panel, and I really appreciate that Regulation Asia is so forward-looking to tackle topics like this, because I think we were saying in our discussion call getting ready for this that there's not many discussions happening like this. So very much appreciate having the platform. So we'll now turn to the Regulation Asia co-founders, Brad McLean and Nick Wakefield, for their final closing remarks.
Thanks, Leah and panelists, for an interesting conversation on the emerging space of DeFi and the regulatory discussions around it. Well, here we are, the end of 3 busy days of learning, sharing, and exploring issues related to fraud and financial crime. I'm Nick Wakefield, co-founder of Regulation Asia, and I'm joined by fellow host and co-founder Bradley McCain. So it's time to pack our bags and take what we've learned back to the office or home office or wherever you may be. And while we've only started to scratch the surface, the past 3 days have provided a unique opportunity to hear from regulators, investigators, and leading industry thought leaders to understand the unique challenges institutions face across Asia in the detection and prevention of fraud and financial crime, and how they are better prepared in the ongoing battle. Brad, perhaps you can share a few of the highlights from some of our sessions. What do you think would be the key takeaways for our attendees?
So it's a good question. I mean, I love the forward-looking discussions such as the DeFi conversation we just had and the sanctions and the CBDC earlier this afternoon. But for the biggest highlights, we're really hearing from the regulators, the FIUs, and thought leaders on their key priorities and top-of-mind issues for the coming 12 months. I mean, judging from the discussions over the past 3 days on the issues of fraud and financial crime, if I was to summarize this ongoing battle against bad actors into a single sentence, it would be old challenges, new tools. Across the panel, there was a clear linkage between fraud, money laundering, organized crime, and terrorism financing, and it makes perfect sense of why some jurisdictions are trying to raise fraud to the level of a national security priority. And I sense that this is going to be a theme over the next couple of years across the region. However, from the discussions, it also became clear that while financial crime is reaching new levels of sophistication, yes, institutions will need to, I guess, balance between efficiency and effectiveness in disrupting it. But technology is far from the silver bullet. Moreover, it will be our abilities to understand and contextualize our clients' behaviors that will best prepare us in this ongoing battle against bad actors. And from all of this, I really surmised, and this was a theme across all of the panels, privacy is that, last bastion that we really need to battle, especially cross borders. Privacy is going to continue to be such a massive barrier in the detection and prevention of fraud and financial crime. So it's something to look at, continue to look at across the next couple of years.
Excellent. Thank you, Brad. So with over 1,400 participants across the 3 days, 65 speakers, we're almost done. So a big thank you to our sponsors. Obviously, without their kind support, we would not be able to put on such an event. So thanks to Nice Actimize, Refinitiv, Bureau Van Dijk and Moody's Analytics Company, Chainalysis, Elliptic, Napier, TRM Labs, and Comply Advantage.
Thank you to all of our attendees, distinguished speakers and panelists for joining the discussion. We soon will be announcing our upcoming RegTech Asia events, so we hope to see you all there. Remember, you can keep up to date with the latest regulatory news and insights at www.regulationasia.com or, of course, our free daily newsletter. Thank you all and have a great evening.